Hello, welcome back. Today I want to look at this question. It's on goodwill arising as well as consolidated statement of profit and loss. So I want to screenshot this question. As we go on, we shall refer on it. So let's start. We have been given H Limited, a public limited company which operates in the manufacturing sector, has made investments in other companies. The foreign draft statements of profit and loss and other comprehensive income for the year ended that September 2024 relate to H Limited and its investment companies. So we have the H, S and R Limited. So P&L. Then we have the additional information. H Limited had acquired a 25 equity interest in R Limited several years ago for a cash consideration of 1,800 million, when the retained earnings of R Limited stood at 2040 million and had no other reserve. On 1st April 2024, H Limited acquired a further 50% equity holding in R Limited for a cash consideration of 3,500 million. The retained earnings of R Limited as at 1st October 2023 amounted to 3940 million. The original 25% interest in R Limited was considered to be fairly valued at the equity accounted value as at 1st April 2024. The fair values of net assets of R Limited, which are approximated their carrying amounts, were 4,900 million as at 1st April 2024. H Limited had also acquired 8% of 500 million equity share in S Limited on 1st October 2022. This acquisition involved a cash consideration of 2,300 million and share exchange on the basis of 2 shares in H Limited for every 3 shares acquired in S Limited. The market price of 1 H Limited share at 1st October 2022 was 15 shillings per share. The carrying amount of net asset of S Limited at acquisition was 5,100 million, but the fair value of net asset at 1st October 2022 was 5,300 million. The fair value increase was due to unrecognized customer risk, which had a remaining economic useful life for 5 years at the date of acquisition. The group policy is to measure the non-controlling interest and their fair values at the date of acquisition. The fair value of non-controlling interests in S Limited was 800 million and in R Limited was 540 million at the respective dates of acquisition. So assume that all income, expense, gain and losses are accrued even throughout the year. No impairment on goodwill was reported during the year ended 30 September 2024. So we are required goodwill arising on acquisition of S Limited and R Limited, consolidated statement of profit or loss, and other comprehensive income for the year ended 30 September 2024. So without hesitation, we go to the first question, which is goodwill arising. So we shall calculate for S as well as for R. So a minute, you get the screenshot. So let's continue. So our goodwill arising on acquisition of S and L Limited, we are going to start with S Limited shall have a working. So S Limited shall start with the consideration paid, which we are given to be 2300. Then we have been also been given we have to calculate the share exchange. So from our question, we have been told that H Limited had also acquired 8% of 500 million equity share in S Limited on 1st October. And the acquisition involved a cash consideration of 2300 million and a share exchange on the basis of 2 shares in H Limited for every 3 shares acquired in S, and the market price of one H Limited share was 15 per share. So we have to calculate in our working. So our share exchange, we are given that is 2 shares for every 3. So you have to multiply by the 500 million equity that you have been given. Then the percentage of the parent, which is 80% that you have been given, and then the market price for every share, one share in H Limited, which is 15. So it had acquired 8%. So we are going to get 400 million. So then we have to add the NCI, which we have been given the share of the net assets. That one we are being provided, which is 800. So the total there give us 7100. Then we less the fair value of net assets, which we have also been given to be 5300. We have been told the current amount of net assets of S Limited at acquisition was 5100 million, but the fair value of net asset at 1st October was 5300 million. So we are going to use that, the fair value. So the goodwill on acquisition will be 1800. So that one is for S Limited. So we are going to calculate the goodwill for R Limited. So the same. So we are going to start with the fair value of previously held interest. So here on our workings, we have been told that it had been acquired, H Limited had acquired 25 equity interest in R Limited several years ago. So we have to calculate that the fair value of that, of the previous held interest of that. So let's go to our working two. So our fair value of previously held interest of 25%, we are going to start with the cost of investment during that several years ago, which was 1800. Then you also have to add the share of post-acquisition retained earnings, because we have been given retained earnings to that 2040 million, and also on 1st October 2023, it also amounted to that 940. So you also to subtract that. So a share of our post-acquisition retained earning, which was 25% of the equity held. So on 21st October was 2023, it was that 940. we have to subtract the retained earning at the day of acquisition, which was 2040. So you multiply by 25% to get 475 million. Then you also have to add the share of total comprehensive income for the year during that period. So in our working form, share total comprehensive income will remove the 25% the equity interest. We have been given to be comprehensive income for that year was 680. And then the duration, it was from 1st April. H Limited acquired a further 50% equity. So since our year is starting from 1st July, not July, the 1st October to 30 September 2024. So it's 1st October 2023. So from 1st October 2023 to April, those are 6 months. So 6 months, you have to multiply that the 680 by 25% and the equity share to get the 85 million. So the total the fair value of that will be 2360. So you add that. Then you have to add the cash consideration for additional interest of 50% during that 1st April 2024, which is which we have been told to be that 500. Then we have to add the NCI, share of net assets. We have been given that to be 540. So the total there is 6400. Then we have to less the fair value of net assets. We have been given also to be 4900. So the total there, goodwill on acquisition will be 1500. So that is part A. We are supposed to do that. So to get the S Limited goodwill to be 1800 million, and that one for R Limited 1500 million. So we can go to the second part, which are being told to calculate the consolidated statement of profit and loss and other comprehensive income. So consolidated statement of profit and loss and other comprehensive income for the year ended 30 September. So for our H group, we are going to start with the revenue and our workings. So I'll put them side by side. So our revenue will be working 5. So we have to earn the revenue for H Limited, which is 6200. For S, which is 2840. And then remember R Limited, it became a subsidiary after 6 months. So for only 6 months during that period. So you have to consider that. So its 11 is 2120. You have to multiply it by 6/12. So the total is 100 million. So that is our revenue. Then you go to the second is cost of sale. We do the same. So in 6, we have to get the H Limited have been given 4680 S 1640. The same scenario. R we have to multiply by half, or the 6/12 to get 590. So the total there 6910. Then you have we get our gross profit, which is that 110 after you subtract that. And then we have other income, that shall be our working 7. So other incomes for H Limited, we have 315 S105. Remember the 6 month for R, so the total will be 450. Get our total income, be 3,640. Then you have distribution costs as working 8. We do the same. Limited, you have 330 S and R the 6 month. We get the total of 585. You have to rest this expense, and then we go to administration expense. So we start with our H, which is 240, and then you have S 140, R for the 6 month. Then we remember in our question we have been told the unrecognized customer risk depreciation, which led the carrying amount of net assets of S Limited at acquisition was 5100 million, but the fair value of net asset 1st October 2022 was 5300 million. The fair value increase was due to unrecognized customer risk which had a remaining economic useful life for 5 years at the date of acquisition. So you have to get that depreciation. So you subtract 5 by 5 years to get 40. So our administration expense is 460. Then we have the other expense. So we do the same. We add for H, H Limited. Then you have the S and the 6 month for R Limited. So we have 345. Then you go to the operating profit. So we add that to get 2,255 after we subtract our total income. So then we have now to calculate the share of profit of integral associate. We have been told that for the 6 month it was an associate, R. So the share of profit of integral associate 25% times the 600, which was the profit for the year for R, times the 6 over 12. So we add that 75. So the total profit was that of the income from the integral associate. You get 23.25. Then we have to subtract the finance cost as our working total. We consolidate that, which is H Limited, the S Limited, and also the R Limited. So we add the finance income, we consolidate it, working 13. So for H, 90, S 70, R for the 6 month, we get the 215. So profit before tax, when you subtract that, and you add and subtract finance cost and income 2370. Then you have to less the income tax, so as working 14. H you have 285, S 45, and then the 6 month you have 70. So you less the 500 to get the profit of the year to be 1870. So then you have now to find the other comprehensive income. So for the gain on property and valuation, we have working 15. So we add H, which is 160, S 50, and the 6 month get 250. Then you have to get the share. The share of the valuation gain on associate for the 6 month. Which will be working 16. So for the share of valuation gain, so we get the 25% when it was an associate. We have been given the comprehensive to be 80, then we multiply by the 6 month, which was the gain on property revaluation, which is 80. So we get it is 10. We add in our comprehensive income to get the total comprehensive for the year to be 2130. Then we find the profit for the year, which is for the attributable to owners of the parents as well as the NCI. So we shall calculate from the starting from the NCI. So our working 17 for the NCI. You have to calculate the NCI for S and R. So we start for S. Profit for the year for S, we had been given to be 740. Then you have to raise the depreciation for the unrecognized customer listing, which was 40. We get 700 for the share portion for this S limited. It is 20 since the parent has acquired 80%. So times 700 to get 140. So that is the NCI for S limited. For R, we are going to get the 25%. We have been given the profit to be 600, but it was a subsidiary for 6 months. So we get 75. So the total profit for that is 215. So we get our 215 from that. So we raise the total profit or the profit of the year from 1870. So we are going to get 1655 as the attributable to the owners of the parent. So we get now to total comprehensive income for the year. The same case, attributable to owners of the parent as well as NCI. NCI is our working 18. So profit for the year attributable to NCI, we have seen here that 2 S and R, we have 215. So that we bring down there, and then we have to add the S and R limited. So for the comprehensive income attributable to S limited, it is 20% times. In our information we will be given it 50 for S, so we get 10. For R we have been given to be 80, and the 6 month also 10, so the total to be 235. So attributable to owners and to NCI, so 235 we less the 21 from 2130 and we get 1895. So that is our total comprehensive income attributable to parent and NCI. So that is what we were supposed to do, to provide the consolidated statement of profit or loss and other comprehensive income for the year ended that September 2024. So if you have any question, please leave it at the comments and I'll come by and answer. So we have provided the goodwill on acquisitions as well on S and R limited, especially where we had the fair value of the previously held interest. Thank you and see you on my next video.